Good morning. My name is Dr. James Aaron Brown, and I'm excited to talk with you about what I think is a very exciting topic, stock splits. And a few weeks ago, Amazon announced that it is going to split its stock 20 to 1. And this is exciting news. It is news that allows more investors to be a part of owning Amazon. And we just want to explore some ideas around what stock splits are, why do stock splits occur, what are some strategies for you investing, and then we'll just do a quick recap. So, on May 25th, Amazon's board is going to meet to discuss and vote on splitting the stock 20 to 1. And when the board meets, and if they vote in favor of splitting the stock, then the stock split will likely take place on June 3rd of this year. So, how does a stock split work? Well, most stocks split 2 to 1. And that has been the typical tactic when stock valuations continue to grow and the company decides to split 2 to 1. Because historically, splitting 2 to 1 got the price of the stock down below $100. Once a stock dips over $100, it's more difficult for investors to invest in that stock. So the last time that we might compare like a big technology company is Apple. So in the year 2000 and 2005, it split its stock 2 to 1, which dropped the price enough for smaller investors to get in on the action. Now, on August 28th, 2020, Amazon split its stock again, but it split 4 to 1, and this got the price below $100 so that more investors could take part in it. So, again, this is to democratize and allow people to get involved. But there are other strategies to doing a stock split. Again, the board is going to meet to vote on the stock split, and part of the reason is that we see the value of our company only going up. We think this is a good time to split in order to get smaller investors in. And if we split, this is a bullish signal. Okay, in investing and finance, we talk about signaling theory, doing activities that signal to investors that we are performing well and you should get in on this. So, with the stock projected to increase in value and splitting the stock 20 shares to 1, that means that at today, April 19th, Amazon is currently trading around $3,100. If that stock splits at today's present price, that means each share is going to cost $155 per share. But when it splits, you should not sell your shares. You should hang on to those shares. Don't do any day trading or anything like that. Unless you're into day trading and you have a tried and true strategy that works for you. But what does Amazon really have to gain from a 20 to 1 split? And the answer may lie in the Dow Jones Industrial Average. So the Dow Jones is the perceived premier stock index, and it contains 30 companies that the Dow says is a solid representative of the economy in America. However, the index tends to shun very high-priced stocks because it sees those companies as outliers instead of examples of the overall economy. So many big tech firms, Google for instance, is not found on the Dow because they don't want to imbalance the weighted average of their index. So right now, the Dow doesn't see Amazon as a true representative of the American economy and stock market. It's more of an outlier, like I said. If Amazon is included in the Dow, then more individualized investors get on board and buy stock. And the Dow Jones will also buy stock in Amazon. And ultimately, these actions will serve to increase the price of Amazon shares. And if you're a board member holding Amazon stock, then your shares will increase too. In this instance, a rising tide can raise all ships. So, what can you do to invest in Amazon? Now, this is not investing advice. I'm just sharing with you what you might do, what other traders typically do. My recommendation is always, if you are seeking to retire and grow your wealth, you probably want to do that through a mutual fund that you invest in frequently. That is the best way in the industry to increase your wealth. So I'm just sharing 2 activities that you can engage in to potentially take advantage of the Amazon stock split. So the first is fractional shares. Now again, this is an example of democratization of investing. And so apps like Robinhood, and I am not promoting, endorsing Robinhood, anything like that. I'm just giving you an example. Go out, do your own research. If this is something that you want to pursue, go do your own research and figure out what platform you might want to use. But Robinhood allows you to buy fractional shares. You don't have to buy the whole share. Robinhood allows you to do this up to 1/1,000,000th of a share. Now, I don't know what you would do with 1/1,000,000th of a share, but you have the ability to do that. So the idea, again, with fractional shares, that you democratize it. You allow smaller investors to have access to the market. And personally, I think this is a great thing. However, again, tried and true ways of growing your wealth is through mutual funds. Now, the other thing that you can do to take advantage of the stock split before the day of the split, and when we will see the bump in value, probably almost immediately, is to buy a share of Amazon right now. To be completely transparent, this is something that I am considering, is buying Amazon right now so that I can take advantage of the stock split. So this keeps you this gives you the ability to purchase the stock now and not have to ride the waves of fluctuation on June 3rd. Now, Amazon also, again, this is a signal. Amazon their board has also authorized management to buy back stock up to $10 billion. Now, as far as we know, Amazon has not actively engaged in a big $10 billion buyback. Again, this is a signal that Amazon believes in the value of its company and its shares so much that they're willing to buy back up to $10 billion worth in anticipation of it performing favorably. And so just to quickly recap, Amazon's going to split its stock 20-1. Most likely that will occur on June 3rd if the May 25th meeting goes well. On average, the price of a company's stock when it splits goes up in value almost immediately. This did happen when Amazon announced the split. We did see the value go up, and then when the split occurs, it likely will increase, but there will likely be fluctuations around that increase as well. The price rises on the stock not because the company is generating more revenue. Instead, it is because investor sentiment is agreeing with the signals of the split announcement as a positive signal of stock performance. Now, if the stock splits and the next quarter earnings are not favorable, we will see the price of Amazon fall back to a previous level. So it will likely lose value on the price of the stock if the next quarter earnings are not favorable. And ultimately, companies that democratize access to their stock through splits is typically beneficial for everyone. I'm Dr. Aaron Brown. Thank you for joining me. Please feel free to leave comments below. And if you have any experience with stock splits or purchasing, we'd love to hear from you.